Hello. In previous videos, I've talked about bullish or summer recipes. I've also talked about bearish or winter recipes. In this video, I'm going to talk about an all-weather recipe. A recipe that is capable of working well in any market and can be tuned to be either very aggressive or very restrictive. It doesn't do well with a trailing stop loss or with any kind of a trailing buy, simply because it works off of the highest highs and the lowest lows of the market. It also works on the basis of finding the best volatility within the market. I have this recipe loaded already, and I will put a link in the description. I'm not going to go through the connectivity of it because it is really not that impressive. Not in and of itself. The simplicity of this recipe is what makes it impressive. This is just a standard support and resistance with a support and resistance length of 987. This is just a standard ATR. Nothing at all really modified about it. The only other modification to support and resistance is I carry a signal for 10 candles. And of course a standard base print dollar cost averaging with a 2% deviation and a 2% take profit. You can see here the entry point and here the current profit level, waiting for it to exceed the ATR range and the resistance level. This particular coin does extremely well, as I will take it back throughout previous trades. And here is the selling point of the trade itself. So let's find the beginning point of this trade. As you can see, it does quite well, and at multiple points you can take a manual sell-off if you want, depending upon how you want to look at the market. This particular recipe also does quite well with a simple take profit. So you have multiple avenues of getting in and out of the market, literally at any approach or point you want. And as you can see, in hunting this particular entry point, there are a lot of good places to take a good profit. So it really just depends upon your risk assessment and how you want to actually collect your profits. If you want a significant profit boundary, then take profit might not be in your best approach. However, if you want a quick profit to get in and out of the market as quickly as possible, then it becomes quite easily a good option. So as you can see, when working with this very simple approach, it lends itself nicely to a lot of different possibilities. Even if you wanted to become more aggressive than this and using the price basis, you have that option. This particular recipe does well on a wide range of coins, and it is always very limited in terms of how many positions it takes on. I'm now going to move to the 1 hour chart because ATR at the 1 hour chart does remarkably well and only picking the best and highest volatility ranges. This chart also highlights some very interesting profit boundaries, and that is something that stands out quite significantly with this particular setup, where you can actually scan and see just how much of a profit a particular coin may make well over the basis of its deviation and take profit boundaries. And how much of a reference point you have that may very well give you the potential to take a profit at any point in time you wish. For example, we are looking here at the March 2020 Black Thursday crash. You can see pretty dramatic unless you're running this particular recipe. It kicks in, and here you on out you can profit anytime you want. Or you can simply let the market ride its course until it reaches both volatility and breaks resistance. So this is a very well-tuned process for a very simple and direct approach. Everybody loves Bitcoin, and Bitcoin can be a nightmare to trade unless you run this recipe. And then it is, well, quite impressive. Here is the profit. Let's go find the initial purchase. So anywhere from May on, it was nothing but pure profit just waiting to be picked from the tree. Again, the March 2020 crash provided the perfect entry point. And you'll notice the irony of this recipe. It doesn't really have much room for trailing. So trailing is not very beneficial. Now let's pick some coins that are less popular and more likely problematic. Uni has been a favorite for some people for a while. And yet, when you look at the charts, you can see even it has good opportunities, albeit at a higher risk. The nice feature about this recipe is solid coins won't accumulate very much, but weaker coins will, so you can see the difference fairly quickly. The dynamics of a coin at any level are very clear and visible right here. I don't have the analyzer loaded simply because I don't need it for this particular recipe. With an $11 position, my max exposure is going to be $44. My take profit is 2%, so when that process comes, I know I will have a minimum 2% of profit of this boundary. The other thing you will notice is that this recipe works well even on very difficult coins like XRP. This coin side channels quite frequently, but yet it only has a very limited exposure, even when you look at longer terms. You see that on the 1 hour mark, this coin is just ripe for plucking whenever you want it. Or you can simply let it continue until it breaks both the average true range upper boundary and the resistance boundary. But you can see very good potential anytime you desire. Now you can make this more aggressive by picking a shorter time frame for your support and resistance. You can also pick lesser channels than the maximums within your ATR. So there are a wide variety of approaches that you can make this particular recipe quite aggressive, as well as quite or deeper bearish or conservative. Notice here we have a whole string of lower lows, but it's only here when it breaks the lowest volatility that an actual purchase is made. So again, you see there's really no way to go below this. Here is the perfect example where you could get out of this right here with a profit and then get back into it and get another profit from that if you wanted to. Or if you had your take profit set to DCA versus strategy. This is purely about risk assessment in terms of which one you choose. A flat take profit will be faster, but at the same time, you will leave profit on the table. And that can be a problem if you're looking to maximize the impact of your entries and your exits. So there is a give and take dynamic to this recipe that can really fit your own risk assessment quite nicely, depending upon how you actually view the market. I personally like the strategy mode. That way I have the option just to let it sit until I am ready to take the profit, or let it take it on its own depending upon the market. So there is really a very wide dynamic that this particular recipe offers and allows. It is something that you should consider when you are making your trading decisions. All weather recipes can be the best mix of both worlds. You can be both bullish and bearish at the same time. It is simply a matter of your own budget and risk assessment and how well you tend to want accumulation and how much accumulation. Let's go pick a coin that is just notoriously bad. The market is not very good and it is very difficult to work with. This is the perfect coin that is not a good coin to work with at all. It's very difficult to get into. It's very difficult to get out of. And it's very problematic all the way around. And yet, For those that do like this coin, it can do very well with this approach. Let's try another coin that has caught the market nowadays. Theta has made a lot of news, and yet it still can be quite interesting of a coin. When you look at its market, you can see it is often undervalued, but provides good entry points appropriate to its price volume value. It also provides a lot of breaking points within the support boundary. But by comparing the volatility of the support boundary crossings, you can eliminate a lot of unwanted entries. So this is an example of a recipe that can do well with minimal exposure and can often bring very good profits if it fits your risk assessment. Let's go to BNB, the Binance coin. Another coin that is difficult at times to trade, as it has wild swings and fluctuations, and yet you can still do very well. Now, some of these coins, you can actually use longer resistance boundaries or longer support boundaries to provide you with greater protection against unstable markets, or if you want a more aggressive approach, to choose smaller numbers. For example, smaller numbers on a support boundary will offer more buying positions while leaving the selling positions at a minimum. If you reverse it, you can get more selling positions and less buying positions. So there are a multitude of ways that this can be tuned. You could couple this with a moving average or with a MACD or any other myriad of combinations. You would have to tune each one appropriately, or you can simply use this combination as it is, which is remarkably simplistic, but very effective of finding the higher highs, the lower lows, and where the volatility actually makes differences. As you trade and you look at your markets, sometimes having this kind of a combination between winter, summer, and all weather can help you make the best choices for any market under any situation. And if your platform permits it, like 3 Commas does, you can actually set up one bot for each one and maximize your effect all the way around. There are a myriad of possibilities and options that such thinking gives you, and gives you the ability to explore depending upon the platform that you choose. Be sure to always look at your options, and be sure to always consider your own personal risks. Each market is unique and dynamic in and of itself. While certain genres of recipes work well within each market, finding the best approach is really often finding what fits best with your budget and own personal tastes for risk. Even the wildest and most aggressive strategy will profit in the worst market possible if you have a good budget. It is strictly up to you which one best fits how you feel about the market and whether or not you have done extensive amount of testing and analysis to determine the best and most appropriate action. As you can see, this one is about ready to cross its resistance boundary and sell off. Options are always there in the best markets and the worst markets. How you pick those options determines how you trade. Always do your analysis and research. Always look at different options. Look at the market in different directions and different approaches, because sometimes the best way to find the best profits or the most interesting opportunities is not to use the standard cookie cutter approaches, but to think out of the box. And that can be done in the simplest of ways. As I said in the beginning, I will put a link to this recipe in the description. Be sure to take a look at it and compare it to both the winter recipe and my more aggressive summer recipes. No process is perfect for every market, but there is certainly room to be said that having a good repertoire for your tool set can give you better opportunities. Remember, you and your own personal insight into the market is what will decide how profitable you are. Even the best recipe can be a disaster if you let the news cycle and fear cause you to interfere with the algorithm. Don't trade without knowing exactly what you're trading and understand the risks therein. If you are afraid of losing money, then you haven't picked the right recipe. You should be able to turn it on, set up your alerts, and no matter what happens, know that your recipe will make the best decisions for the market based upon what it is supposed to do. You know this because you spent time researching, studying your asset, and understanding what kind of an asset it really is. You know this because you understand how the asset functions. If you haven't done that kind of research, you will lose money. There are no shortcuts to trading. There's no get-rich-quick schemes. And 90% of the market of opportunity is just being at the right place at the right time. You can improve your chances by knowing what you're doing ahead of time because you've planned it out. You've researched the material and you've prepared for the worst case scenario as commonplace. These are the steps that will make you a successful and profitable trader. Whether you choose to be bearish all the time, bullish all the time, or a little bit of both. Until next time.